What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And the markets did acceptable today, guys. We had a green day across the board when it comes to the indices. Russell 2000 goes up 0.36%. The Nasdaq goes up 0.40%. Dow goes up 0.05%, pretty much broke even. And the S&P 500 went up 0.31%. Crude oil goes down 0.13%, and it closed the trading session at $118.72. My goodness. Unbelievable, guys. We are seeing very high prices for oil across the board, natural gas. And you guys know that on Friday we have the CPI data report of May. So this is going to be a fun one probably on Friday. Gold goes down 0.30%. Silver goes up 0.90%. The 10-year Treasury yield once again burst above 3% today, goes up 2.74%. This is bad news for the bulls, guys. Remember that from a mechanical standpoint, most of the algorithms, most of the investment and trading algorithms are designed to sell out of growth stocks, tech stocks, and higher multiple stocks whenever the 10-year treasury yield goes on a tear. And this is the case once again. And obviously, guys, we have the CPI data report coming out on Friday. We have very, but very high prices when it comes to energy. So who in its right mind is expecting a better than expected CPI data report on Friday? Pretty much no one, right? So maybe the markets are, are pretty much sure, or let's say that are already moving ahead of what could be potentially what what could potentially be a worse than expected CPI data report on Friday. So keep a close watch on the 10-year Treasury yield because we had a decent day today. And all of the indices went up, most of the sectors went up. But if the 10-year Treasury yield keeps on going higher, guys, this is going to put downwards pressure over most of the higher multiple stocks, growth stocks, and tech-oriented stocks out there. I wanted to show you these guys. So when it comes to price targets for the S&P 500, what do we have on the table as of now? So check this out. Mike Wilson with Morgan Stanley says that the S&P 500 is going to be at 3,900 points by the end of this year. David Costin with Goldman Sachs says 4,300. Manish Deshpande, I gotta be butchering the last name of this guy and his name as well. He says that the S&P is going to be at 4,500. Savita Subramanian with Bank of America says 4,500, and Scott Cranard with Citigroup says 4,700. So what do you think? We have a bunch of price targets over here. I hope for Scott Cranard to be right. 4,700. The first half of this year was very tough. And I think, I could be mistaken, and you guys know that I am a bull. I think that the second half of this year is going to be better relative to the first half of this year, but obviously that is going to depend on whatever happens with inflation. If inflation happens to moderate, we have a first chance of going higher from now until the end of this year. Or on the other hand, if inflation gets worse and gets out of control, I think that we could go lower. And by the way, I saw an interview with Mike Wilson today on CNBC, and he was talking about a potential bottom for the markets at 3,500 or 3,400. So we're talking about a huge downside. And when it comes to the S&P, according to this gentleman Mike Wilson, we will see what ends up happening over here. If we take a look at the sectors of the markets, the only two sectors that went down today were real estate, which went down 0.30%, and energy, which went down 0.11%. The rally was led today by consumer discretionary. You guys know that finally the stock split of Amazon went through today, and Amazon started the day pretty well. It gave up most of the gains that it gained in the morning into the closing bell, but it was enough for Amazon to push the consumer discretionary sector higher today. Materials followed consumer discretionary, goes up 0.95%. And when it comes to the most important sectors of the markets, the financial sector goes up today 0.29%, and the tech sector pretty much broke even. It went up 0.01%. If we take a look at the advances and declines distribution of today's trading session, today we had 3,895 stocks going up and 3,640 stocks going down. So we can make the case that the markets are kind of undecided. And maybe, I don't want to say that we are going to have a sideways week until Friday, but the CPI data report is going to be extremely, but I mean extremely important. So I wouldn't be surprised if the markets don't actually do much into the CPI data report that comes out on Friday. I want to show you guys now the trades that I closed in today's trading session. Very good trading session for me. This is my Patreon. It is obviously written in Spanish. So let me tell you, I closed first of all, I closed a swing trade that I opened on Tesla on Friday. I ended up making over here $525. Then I closed a call option. These are obviously the alerts that I post on my Patreon. Then I closed a call option that I purchased on UPS like a month and a half ago. I held the bag for quite some time, and today I ended up making $155. I also closed a swing trade on Amazon. I was holding the bag as well, guys. I purchased 5 shares of Amazon, pre-split, obviously, like a month ago at $2,500. So I had to put up with some pain, but Amazon went over my average cost today, and I decided to close this trade. I decided to secure my profit. I ended up making over here $250. And finally, I day traded Tesla, guys. I purchased 35 shares at around $710, and I closed the trade at around $717. I ended up making over there $211. And that was it, guys. Very nice trading day for me. I ended up making $1,141 today. Russell 2000, I rarely ever go over the Russell 2000, guys. It goes up today 0.36%, and it closed the trading session at 1,889 points. So you guys know that this is my favorite market leading indicator. The Russell 2000 was the index that led the way down because the correction in the Russell 2000 started out back in mid-November of last year. So this was the index that started to go down ahead of time. Let's just put it that way, right? Because this is let's say that this is a leading indicator of the stock market. So the situation of the Russell 2000 is starting to get interesting, guys, over here, because the Russell is about to burst above 1900 points. 1900 points happens to be a previous support back from late February and also back from late January. So if the bulls of the Russell can take on 1900 points, they have an interesting gap to fill up to the 100-day moving average near 1970 points. If the bulls of the Russell can reconquer the 100-day moving average, then the Russell is going to be the very first index out of the bunch that reconquers a major moving average such as the 100-day. So we need to keep a close watch on the Russell 2000 in normal market conditions. And as I just told you guys, since the Russell was the first index that started to go down, the Russell should be the index that should be leading the way up. It isn't overbought. We can see over here the RSI of the Russell sitting at 59 points. And something that is worth pointing out over here is the fact that the Russell, guys, is 22% of the highs. So the Russell, as of now, even though this is, let's say, a riskier index relative to the NDX, the Russell is 22% of the highs, whereas the NDX is 25 or 26% of the highs. So this is a puzzle piece that we have on the table as of now. So keep a close watch on the Russell 2000. Now let's go ahead and take a look at the S&P 500, which goes up today 0.31%, and it closed today's trading session at 4,121 points. So guys, I told you in the video that I posted last week that on Tuesday, I think, of last week, no, on Monday of last week, that we might be about to see the unfolding of a bull flag pattern over here in the case of the S&P 500 between 4,180 points or 4,160 points and 4,070 points. So if the bulls keep on consolidating slightly above 4,070 points, then we might see this bull flag pattern finally unfolding. In which case, if this pattern happens to be completed, then the bulls have another leg up to 4,220 points. This is the low of January. So can the bulls complete this bull flag pattern? So this might be in the cards from a technical standpoint. This is possible. The bulls are trading as of now above the 50 SMA on the 4-hour chart, but obviously everything is going to depend on whatever happens with the CPI data report that is coming out on Friday. Or maybe, who knows, maybe the bulls can complete this bull flag pattern. They can fill the next gap up to 4,222 points, which is a very important and easily identifiable previous support. And if we are trading near 4,220 points by Friday, and if the CPI data report happens to come out worse than expected, which might be the case, most likely, then from 4,222 points, we can see the beginning of another leg down. If we take a look at the RSI of the S&P, it is at 54 points. By the way, I didn't tell you, today the VIX went up 1.13% in a day in which the S&P 500 went up. So we can make the case that despite the fact that volatility, that the VIX is lower relative to the level that it was 3 or 4 weeks ago, because it closed near 25 points. Since the VIX went up in a day in which the S&P 500 also went up, then we are seeing some decent put buying, maybe in order to hedge against the CPI data report that comes out on Friday. Let me pull up here quickly the 5-day, 5-minute chart and take a look, guys, at how 4,160 points is obviously the most important resistance for the bulls. So the bulls fell today at 4,160 points. They also fell last week on Thursday, and they also fell on Wednesday and Tuesday as well. So clearly, guys, from a resistance standpoint, 4,160 points is going to be the next important spot for the bulls. And now let's go ahead and take a look at the NDX. The Nasdaq 100, I am going to pull up here the 4-hour chart. So the NDX goes up today 0.41%, closes today's trading session at 12,599 points. So we closed 1 point below a very important spot in technical terms, 12,600 points. I will tell you guys in just a second why 12,600 points is such an important spot. And as I just said, in the case of the S&P 500, we have a similar picture over here in technical terms. So the bulls are trading above the 50 SMA on the 4-hour chart, and we can clearly see over here what could potentially be a bull flag, guys. So we could have the lower line of the bull flag at around 12,474 points, and we have a clear resistance for the bulls of 12,900 points. So can the bulls complete this bull flag pattern? If that were the case, the next important gap that they are going to have to fill to the upside is going to be none other than 13,000 points, guys. The big fat number of 13,000 points. This is a previous support back from mid-March and also a previous support back from late February. And let me show you guys over here on the 3-year chart why 12,600 points is such an important spot. We are talking about a former support back from March of last year, and we are also talking about a former area of resistance back from November of 2020. So the most important support that the bulls need to hold in the upcoming trading sessions is going to be 12,600 points. And let's see if they can fill the next gap up to 13,000 points. And mind you, the RSI of the NDX is at 55 points, but this is a very susceptible, if I can speak today, this is a very susceptible index when it comes to the 10-year Treasury yield. As I told you in the introduction of this video, most of the algorithms out there are designed to sell out of tech stocks, growth stocks, and higher multiple stocks whenever the 10-year Treasury yield goes up, because the TNX, The 10-year Treasury yield is an inflation indicator, an inflationary indicator. So if it happens to go on a tear, that implies that the markets are expecting, a very important inflation. Let's just put it that way. And if we have very high inflation, that implies that the Fed is going to have to be way more aggressive, hiking interest rates, and very high interest rates are not really convenient for higher multiple stocks, tech stocks, and growth-oriented stocks. So keep a close watch on these levels in the NDX, but also keep a close watch on the 10-year Treasury yield. Let's go ahead and take a look at the first stock of this video. Good old amazing Amazon. Amazon goes up today 1.18% and closes today's trading session at $124.79. And Amazon was very volatile today, so it went up a lot as soon as the trading session opened. And then, and as I just told you in the introduction of this video, the bulls gave up pretty much all of the gains that were conquered today during the trading session. So I'm going to pull up here the 4-hour chart. I wanted to show you something that I rarely ever show you guys, or that I actually haven't showed you ever here on the channel. The market structure of the stocks that I go over. In the case of Amazon, guys, on this chart we can see the market structure of Amazon. And when I say market structure, I am talking about supply and demand, which is a very important, which are very important components of whatever a stock is going to do in the future. So here you guys can see this blue shaded area. This blue shaded area has to do with the demand for the shares of any stock. And when it comes to the gray shaded area, we are talking about the supply, okay, of the of shares for any given stock out there. So over here we can see clearly an increase in demand for Amazon shares, and we can see a decrease in supply for the shares of the stock of this company. So this is a very positive and very bullish market structure sentiment for Amazon. We have an increase in demand, and we have a fall in supply. And the market structure sentiment is at 8. This would be 8 out of 10. So this is an interesting market structure for Amazon. Market structure sentiment. Let's just put it that way. So Amazon ended up going today 1.18% and closed today's trading session at $124.79. So I showed you a few seconds ago that I closed a swing trade that I opened on Amazon something like a month ago. I ended up making $250, but I really want to take another trade on Amazon, guys. So I am going to be keeping a close watch on this 180 SMA on the 4-hour chart at $125. $125 is also a previous resistance back from early May. So if I happen to see a process of consolidation slightly above $125, if I happen to confirm that this area is providing a good support, I might be picking up some calls, because now we can buy cheap Amazon calls, or maybe shares, who knows. In which case, my price target is going to be the next important gap that the bulls of Amazon are going to have to fill up or fill to the upside. We are talking about $135. $135 is a previous support back from early March, and this is also a previous support back from late January. So if I were able to take a trade from $125-ish up to $134, $135, this would be a 6% profit trade. The RSI of Amazon is at 65 points, which shows that we have a positive market sentiment as of now. The implied volatility isn't that high. Take a look at the chart of the implied volatility down here, in the lower part of your screen, inferior part of your screen, I could also say. It isn't that high, so I might be tempted in order to pick up some calls of Amazon. And let's see if $125, $126 happens to act as a good support for Amazon. Now let's go ahead and take a look at NEO, which is posting earnings this week. NEO posts earnings on Thursday, I think, before market open. Okay, in the case of NEO, the stock of this Chinese electric vehicle manufacturer goes up today 6.08%, and it closed today's trading session at $19.18. cents. So we have a positive sentiment when it comes to Chinese stocks out there because the Chinese finally reopened back up. I actually saw some videos from Beijing and Shanghai today, and everything went back to normal. People are out in the streets, eating and driving their cars. So that's encouraging, even from a supply chain a perspective, right? So in the case of Neo, let's go ahead and take a look, guys, at the market structure. Let's see what the supply and demand for the shares of this Chinese electric vehicle manufacturer is looking like. And in the case of NEO, we have a market structure sentiment of 5.4 out of 10. And we have an increasing demand for NEO shares, and we have a fall in supply. So this is a very acceptable market structure for NEO. And let's see what could be happening over here. First of all, we can see on the 4-hour chart a golden cross that is already unfolding with the 50 SMA crossing above the 180 SMA on the chart. And the bulls of NEO are pretty much below a very important area of resistance, guys, at $19.30. $19.30 is a previous resistance back from mid-April, and this is also a previous support back from late January. So watch out for me over here, guys, because as I just told you, we have a positive market sentiment because the Chinese finally reopened back up. The RSI is at 70 points. It is a bit elevated. But watch out with the bulls taking on $19.50 because if that were to happen, the next important resistance is going to be near 20 bucks. This is the 100-day moving average on the 4-hour chart. And if the bulls take on this 100-day moving average, the next important gap is going to be up to 23 bucks. This is a previous resistance back from late March. So if the bulls of NEO could fill this gap from $19.50 ish up to 23 bucks, get these guys. This would be an 18% profit trade. And the last stock of this video is going to be Bank of America, my neighbors. Because you guys know that the headquarters of Bank of America is located here in the very beautiful city of Charlotte in North Carolina. Bank of America went down today 0.11% and it closed today's trading session at $36.15. And full disclosure, guys, I grabbed calls of Bank of America today. I grabbed the $33 calls that expire in mid-October, I think. So I have a lot of extrinsic value over there. And this is not really a very good looking chart, to be honest. We can still see over here a clear downtrend. We can also see Bank of America trading below the 200-day moving average and the 100-day moving average. We also have over here a death cross with the 100-day moving average crossing below the 200-day moving average. However, I am going to zoom in here on the 4-hour chart. The bulls of Bank of America, guys, are holding this 50 SMA on the 4-hour chart inside a little uptrend, a little uptrending channel on the 4-hour chart. So you guys can see how this 50 SMA actually coincides with the lower line of this uptrending channel. So I'm thinking, and this is the case that I am making in order, or that I made in order to grab the call options that I grabbed today. I'm thinking that if the bulls can hold this 50 SMA on the 4-hour chart as support at 36 bucks, which also happens to be a previous resistance back from mid-May, they might be gathering momentum in order to make another push higher and maybe being able to fill the next important gap up to 38 bucks. 38 bucks happens to be a previous support back from early March. So if I were able to take this trade from 36 bucks ish up to 38 bucks, this would be a 5% profit. And since I grabbed calls, I am going to obviously benefit from a leverage over here. The RSI of Bank of America is at 45 points, very healthy from a technical standpoint. Bank of America is neither oversold nor overbought, and the implied volatility is low, as you guys can see over here on the implied volatility chart, and that was another reason that that I thought about before grabbing the calls that I purchased today. If we take a look at the market structure of Bank of America, let me take a look at this. So Bank of America, let's see what do we have over here when it comes to supply and demand. So we have a very noticeable increase in demand for shares of Bank of America, and we have a fall in supply. Market structure sentiment, as you guys can see over here, 10. Very, but very positive. So I think that I am going to make some good money with the call options of Bank of America that I purchased today. With Bank of America, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in two different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street, the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow. Once again, 3 or 4 hours after the market closes, along with my friend Mario. Bye, guys. Take care. See you guys tomorrow. Bye.